I invest every day that the stock market is open. That's how I go about building up my portfolio. And today, you're going to invest $50 with me into companies and funds that fit my long-term portfolio strategy. No trading, no guessing, no stress. Things I'm willing to hold for the long term. When it comes to my portfolio right now, I'm focusing on tech, AI, and growth, and I will share why each of these investments are currently in my portfolio and still getting attention in order to build up my positions. So if you're new to investing or working with a small budget, know that nothing has to hold you back. Investing is not hard and doesn't take a lot of money. In order to get started, hit the like and let's get started talking about long-term investments. So these are investments. I'm not trying to see gains overnight. I'm building slowly, one day at a time. When the market is up, I invest. When the market is down, I definitely invest. And later on, I'll go a little bit more into what I do when the market is down. But no matter what's going on, I invest anyways. Okay, so we're going to start off talking about SMH, which is the VanEck Semiconductor ETF. And I am on day 7 of investing $10 daily into this ETF. Technology is powering the future, especially when it comes to AI, cloud computing, and big companies in this area are making more and more year after year. So SMH is a fund that holds chip companies. Chips power everything from our phones, computers, cars, everything related to AI. As of the time that I'm recording, down about 2.5%. This fund holds big names like NVIDIA, Taiwan Semi, and AMD, which I also have positions in. And so instead of moving on to investing into more individual companies that I was thinking about, like Broadcom, I decided to incorporate this ETF to have exposure to a basket of semiconductor investments. So I don't have to guess which chip company is the winner. The fund is spreading your money across all of those top names. Next up, I invested $10 into Amazon. It's a red day on the market, also down 2% when it comes to Amazon as of the time that I'm recording. When most people think about Amazon, they think about online shopping, but their real money is coming from many different places, including AWS, which is Amazon Web Services, their cloud computing service. So this cloud business means that companies can rent computer power instead of having to buy it and own it themselves. So they're taking advantage of Amazon servers. So when it comes to Amazon, you've probably been seeing these headlines about huge layoffs of 1,600 corporate roles. Amazon's been getting a lot of attention because they've been trying to cut costs as well as improve efficiency. And in time, this usually leads to improved profitability. And when it comes to Amazon, the cloud side is expected to grow. And the market likes that, to see that companies are going to continue to thrive. Next, I added $10 to Microsoft, down nearly 3% right now. Microsoft owns Windows, Office, LinkedIn, and a huge cloud business. The stock has been having its struggles. It's down right now, even after a strong earnings report. But as a long-term investor, I'm not running away. Many investors don't like how much they're spending when it comes to AI, but a long-term investor can see things differently. The spend now can mean big profits down the line. So when it comes to my portfolio, I'm going to continue to add. I'm going to be updating my alerts today so that I can go heavier than my normal DCA amounts if it comes down another $10 or so to about $395 to $400. Number 4 on the list, I added $10 to FSPGX, which is the Fidelity Large Cap Growth Index Fund. It holds big companies like Apple, Microsoft, and NVIDIA. This is in my IRA, and it's giving a more concentrated focus on those big names than my S&P 500 investment FXAIX. So this is one of those set it and forget it investments that gives me high exposure to those big winners. And my last investment of the day is SPMO, Invesco's S&P 500 Momentum ETF. I added 0.1 shares. That's how I've been going about building this position. Depending on the price, that will have me at about $10 to $12 every time I invest. That word momentum refers to the way that this fund focuses on stocks that are already moving up. Think about riding the strongest waves instead of swimming against the tide. It rebalances twice per year, keeping us exposed to those companies that are currently thriving. So if you have a 401k, every paycheck, money is coming out and it's getting invested no matter what the market is doing. And in these portfolios that I'm sharing, that I am building, I'm going about it pretty much in the same way. I'm not waiting for the perfect day. I'm investing all of the time, but I have built up my knowledge to know when there are additional opportunities. And when that happens, I go heavier. When it comes to my personal investing, I can see that consistency wins. Even small amounts over time really add up. And so I'm not going to be waiting on the sidelines until I have some large sum of money. Think I've timed the bottom of the market. I'm just going to continuously build. And I'm an investor. So with that, I've learned to have patience. And I've been investing for some time now. So I've learned to have patience and I've seen how it pays off. For example, another company that's currently red on the day, I did not add to my position today, but this is Google. Current stock price, $342. But just like the companies I shared today, I was adding small amounts to this over the last few years. And my average price is $135.15. And I'm up about 153% right now. So I may invest daily, but my goal is not to have daily gains. My goal is to build ownership over time. And so you have to zoom out, have an understanding of the fundamentals of those individual companies and the structure, expense ratio, and details of the funds that you incorporate. So that's it for today. That's how I invested $50. Let me know in the comments, did you invest today? If not, what would you have invested your $50 into? Make sure to like, subscribe, hit that notification bell, check out my referral links, join channel membership, and remember, you don't need to be rich to get started with investing. If there's anything that's holding you back from getting started in your investing journey, let me know in the comments so I can send some encouragement your way. Thanks for watching. Okay, bye.